And welcome back, everyone. Yet again, the top of the hour. I'm Mark Johnston, your host for VID 5 in our conference series brought to you by our friends over at Laurentian Bank Securities. Great to have our next guest on tap. We've worked with Darin before, but I want to welcome Darin Labrenz, President and CEO of PureGold Mining, to the show. How are you, Darin?
Doing very well, Mark. Thank you.
Excellent. Thank you. And as I mentioned in our back room there, it's always a pleasure to have a president and CEO who has the geology background to bring to the game as well. So you get a very well-rounded view. So as always, I'm going to step to the side as you offer your presentation to our audience. And I will remind everyone who's watching to please put your questions in the Q&A section so we can get those to Darin right after the presentation. For the moment, Darin, over to you.
Thanks so much, Mark. And good afternoon and welcome to everyone. Today, I'm going to, I guess for those of you who are new to the story, I'll give you an introduction to PureGold Mining, to Red Lake, why we believe we have all the building blocks in place to build an iconic mining company centered in the heart of Canada. For those who do know the story, give you a sense of where we are today, the evolution over the last year as we commence our gold production, and what we'll see for the next few months, and importantly, a reminder of the big picture and where we see PureGold moving over the course of the year and into the years beyond. So without further ado, I'll jump right in. I do want to highlight that I will be making some forward-looking statements. So I caution you on that. And for further information, please look to our filings on www.cedar.com or to our website, www.puregoldmining.ca. So PureGold Mine is centered in Red Lake, Ontario. Red Lake is an iconic mining district in Canada. It's home to some of the highest grade production over the last decade and frankly over the last 100 years of production since the first mining activities in the early 1920s, 1930s. Our property itself is centered in the heart of Red Lake. It's on the site of a historic producer that produced 2.5 million ounces over the course of a continuous 36-year history at a very high grade of about 10 grams per ton. It's a large property package, about 47 square kilometers, with tremendous exploration potential. And over the course of the last 6 years since we've been working on the project, we've developed a brand new mineral resource that's 2.1 million ounces of indicated at just shy of 10 grams per ton, and we've got a further 500,000 ounces of inferred. And from that, we carved out a portion of it. We completed a feasibility study in February of 2019. We initiated construction subsequent to financing and poured our first gold in December of last year. So we're about a year into operations, and we are ramping up. We've learned a lot of things over the course of the last year, but importantly, the investment thesis for PureGold Mining is very much intact, and I hope you'll see why as we walk through this presentation. So when we look at the Red Lake area, you can see that we've highlighted two trends, if you will, by a red dashed line. The trend to the top of the image here is centered on the Red Lake mine operation. Red Lake is a very historic mine in the Red Lake area. It's been in continuous production since the mid-1940s, and today is owned by Evolution Mining out of Australia, who are putting a pretty significant investment into continuing to build and grow the operation. To the south, you see our own PureGold Mine trend, and importantly, those red dashed lines from a geological perspective, they highlight true similarities between the two parts of the Red Lake mining district, if you will. They're both centered on a unconformity that separates the lighter green colored rocks from the darker green rocks. That's an important feature in the Red Lake camp, as you can almost imagine it as a deep crack that forms or really allows the fluids that form the gold deposits to transport up, and so you'll find deposits kind of centered near that unconformity or that fault contact, if you will. The darker green color is known as the Bomber assemblage. It hosts most of the known gold mineralization and almost all of the historic production from the Red Lake area. So over the course of 100 years, you can see, when we talk about prolific, you can see on the right side, there's been 30 million ounces of gold that's come out of Red Lake at an average head grade of close to a half ounce per ton. It is, again, very high grade. Today, we've got two producing gold mines in the area, and we own one of them. Red Lake, Ontario is our sole focus. This is our home. The Red Lake Mine, or PureGold Mine rather, is our operation in the area, and we do benefit from a very strong jurisdiction. Being in Ontario with a long history of mining, you can see the community of Red Lake in the photo that's shown here. There are generations of miners in the Red Lake area, and so we've been able to draw from that expertise. It allowed us to build our project on time and on budget to go into production in December of last year. And we've sourced a large part of our workforce from the Red Lake area, which has, again, this tremendous history of gold mining. I do want to touch on some of the ESG metrics of PureGold. We are positioned to be an ESG leader, and why do I say that? Well, for one, this is an underground mine, so there's a fairly small footprint. It is low tonnage, but very high grades. We drive a lot of value out of the rock without moving a lot of rock. Our power source there is hydroelectric grid power. Today we have in the shallow part of the mine, we're operating with diesel powered equipment, but our plan does envision transitioning into electric equipment underground to again further reduce our footprint. And as a historic mining property, building a brand new modern mining operation with a new water treatment plant, it allows us to really deal with some of the legacy issues of the past. And at the end of the day, and it's not often you can say this from a mining perspective, but we will leave the environment around the PureGold mine in a better place than when we acquired the project. I'm really proud of the First Nations agreement that we signed prior to commencing operations at the PureGold mine. This agreement provides equity participation in PureGold, opportunities to create jobs, to participate in contracts. We've had First Nation affiliated partners working on tailings dam raises that we conducted this year, as well as in crushing and hauling on surface. And longer term opportunities to benefit from education and training, monitoring of the site through environmental monitoring, and financial participation in the project itself. Really thrilled to have both Lac Seul and Wabauskang as our partners in moving the PureGold mine forward. We do have a very strong team in place. As I said, we've been able to draw significantly from the Red Lake area to build out our operational team. Within the board and management team, you can see a number of us have significant experience in the Red Lake area. Myself, I am a geologist by background, as introduced by Mark, and spent a good part of my early career with a senior producer known as Placer Dome. Placer Dome owned part of the Red Lake mine back in the mid-1990s, and I spent time both working underground as a beat geologist at that mine, as well as acting as chief geologist at the Campbell Mine, as it was known. So that gave me a really good introduction to the Red Lake area, to the geology of Red Lake, and importantly to the opportunity it presents. It was around that time that across the fence, the Red Lake Mine, or Dickinson Mine as it was known then, was being operated by Rob McEwen at Gold Corp. And it's kind of an infamous period in the history of Canadian mining. There was a strike that was initiated at that part of the operation. And during that period, Rob took the opportunity to focus on exploration. And there was a discovery that was made that I'll come back to in this presentation, but it was known as the high-grade zone. What's really fascinating about the high-grade zone is it was discovered in the heart of a mine that had been operating for decades. And at the end, it really was the springboard that launched Gold Corp and turned them into one of the largest gold mining companies in the world. Tremendous grade, over 2 ounces per ton for a good part of the operation. Took that mine from a 50,000 ounce producer to 600,000 ounces plus without even changing the mill. So this is the excitement of Red Lake, if you will. Long history of mining, great jurisdiction, but that opportunity for truly transformational discovery and high grade can really drive the growth of a company, and we certainly see that same potential on our property. So initially, very strong geological team here that has this really strong experience in the Red Lake area, and we brought a lot of that knowledge and understanding that's been gained over the last 20 years in the Red Lake area from the discovery of the high-grade zone and applied it at our PureGold mine. And we've made significant discoveries, and I have every reason to believe that we'll continue to make discoveries as we grow our operation. Again, I talked about building blocks. We've talked a little bit about ESG. We've got an operational mine in place now with strong expansion potential. Our tailings management facility itself has expansion potential with permits, growing resource base, we really see an opportunity through exploration to continue to grow operation. And I really think you should look at the PureGold mine and PureGold mining as a growth company. While we are, as we are building up to full capacity underground with our mine, that full capacity is really just the first phase of what we see as a staged growth or a phased approach to building out the mine in the Red Lake area. And again, I'll give you a sense of that as we walk through this presentation. So our growth story really has just begun. Other things that we benefit from here are, you can see in the middle of this photo, we've got a head frame on top of a shaft that goes down 1.2 kilometers. And we're active in that shaft today. We will benefit from it as we get deeper in the operation. In conjunction with that shaft, we have a ramp to the right-hand side of this image that we call our main ramp. And then to the left, you can see a little bit of evidence there of what we call our east ramp, a second ramp. So really a hybrid shaft-supported operation with men and materials going down via the ramps. And ultimately, as we get a little bit deeper in the mining operation, we'll start drawing material out of that shaft and up to the mill, which you can see on the top right of the page. The mill itself is really a crown jewel of our operation. It was brought into first production in December of last year as an 800 ton per day mill. We quickly saw opportunities for a very minor capital investment to expand the production capability of that mill. And today I can say that without a doubt, it is a 1,000 ton per day mill, able to process that day after day with no issues whatsoever. And recoveries are absolutely fantastic at 95+%. And so the mill is operating exactly as we would hope it would. So I'll just talk a little bit more about the phase development strategy that we've had from day one in building out the PureGold mine. I talked about the feasibility study that was completed in 2019, and that really was phase one. In that feasibility study, we outlined a 800 ton per day operation designed to produce about 80,000 ounces a year on average over a 12-year mine life, peaking at 125,000 ounces per year, while mining a deeper part of our deposit called the 8 zone, which really is our high-grade zone. That study and its outcome really was the document, if you will, that framed the decision to construct a mine and ultimately build out the mine. Again, when we look at phase two, this is optimization of the existing plan. Part of that was work that we did in the mill, designed to bring it to 1,000 tons per day. And again, we're very much in a position to do so today. In addition, we made decisions with respect to mining that allow us to ultimately build out the mine to deliver 1,000 tons per day to the mill. And those decisions included widening out of the main ramp from 4.2 meters by 4.2 meters to 4.5 by 4.5. The addition of a second ramp being driven at 5 meters by 5 meters really allows you to think of those two ramps situated on the south end and the north end of the mine, respectively, as two separate mining centers to allow you to more efficiently draw material out of the mine itself. Again, as we get deeper, we'll bring the shaft into operation, and then we have the two ramps and the shaft really allowing you to optimize your mining activities underground. This optimization is underway. We are well advanced in it, and certainly over the course of the last 11 months, are many things that we've learned, and we understand the deposit well. We understand what some of the ramp-up issues have been, and those are being addressed with solutions in place. As we look forward, we look to phase three. This is a further expansion where we're targeting 200,000 ounces a year, bringing the mill up into the range of 1,600 tons per day. This expansion is going to be done by expansion of the underlying mineral resource. And to be clear, this is not new discoveries per se, but these are areas that we've already identified, we've already drilled, they're already sitting in our current resource, and just require further work from a growth perspective, continued drilling, and ultimately engineering studies to fully flush out the third phase or our expansion phase. Key to that is incorporation of our satellite deposits, which I'll touch on a little bit later in this presentation. But these are, again, areas that we've been working on over the last several years, that we have currently identified mineral resources. We've done some early stage engineering work and see an opportunity to bring them into an expanded mine plan through an expansion. And importantly, a real growth aspect of our project is the down plunge potential of the entire mineral system. When you look at our resources and reserves, they've been defined down to a depth of just over 1 kilometer. But we've got drilling down to plus 2 kilometers that has hit the main deposit. And so we think there's a real strong opportunity here to continue to push the deposit downward, drawing it down well below the 1,000-meter mark, and really taking advantage of the deep roots that these mineral systems in the Red Lake area have. If you recall on a previous slide, we talked about the Red Lake mine to the north of us. They're currently mining at a depth of over 2.5 kilometers, with plans to bring it down to 3 kilometers. So, these deposits are known for deep roots, and we certainly see that potential on our PureGold mine site. I just want to keep everyone bearing in mind the big game-changing exploration potential that we see as really being able to drive transformative growth for the company beyond what we know today. These are things like, the high-grade zone to the north of us and our own 8th zone, which we think bears a lot of similarities from a geological perspective. It's got the same environment, and from a grade perspective, being over 2 times the average grade of our underlying mineral reserves. This is a really important comment. Great gold mines aren't found, they're built. And that's what we're doing right now. We're building a great gold mine. We have all the building blocks in place. We've got an operation that's working well. Ramp up has taken longer than we certainly had hoped. But again, we understand the deposit. We understand what the issues are, and we've got solutions in place. And I have a lot of confidence in the underlying resource and our ability to grow the mine. So I do want to touch on some of the achievements. I mentioned the mill. It's working fantastically. It is able to achieve over 1,000 tons per day. We've done that on multiple different days without any issues, and it's done so with a really fantastic gold recovery of about 95% to date. That really reflects the nature of the deposit. Most of the gold here is what we'd call free gold, and it's recovered fairly efficiently with a simple milling circuit. We do see today about 40% of that gold reporting to our gravity circuit, and we've got some plans in place for some improvements in that circuit, which we think will allow us to drive more than 50% of our gold out of gravity. There's a lot of benefits to that. It's opportunities for, again, improved recoveries even beyond the 95%, but it also drives lower consumable use, which has a lower cost profile, and at the end of the day, a lower footprint down the route with respect to the water treatment plant and tail end activities from the milling operation. Within the mine, our second ramp, we mined the first stopes out of that ramp in July. To date, we've mined 2 stopes out of the east ramp. Average grade of those 2 stopes is 9 grams per ton. And it is an important part of our growth as we move forward through the balance of this year and into Q1 of next year. We do see a transition where we'll be seeing more tons coming out of the east ramp, and ultimately giving us the full flexibility of having 2 ramps in place at the PureGold mine. So looking forward, what are we looking to? We are ramping up production towards steady state 1,000 tons per day. As I said, the mill can do it efficiently, and it'll do it all day long, all year long. What we're doing right now is ramping up the mining operation from underground to deliver 1,000 tons per day of high-grade, high-quality stope material to really push the project up to its full capacity. Year over year and quarter over quarter and year over year, we do expect the grades to improve as the deposit does have a grade profile with improving grade to depth. We'll show that in a future slide here. And we're really excited about the 8th zone. Again, this is our high-grade zone. It sits about a little less than 1,000 meters underground. We are deep enough in a ramp now to start targeting it from underground from a drilling perspective, and really excited to do that as it still remains open for growth and does form such an important part of our economic profile and our production profile as we look at the life of mine production plan for the PureGold mine. So I'm going to walk through some of the metrics over the year and some of the things we've learned. You can see the mill throughput on the left side. First couple of quarters, we're sitting around 500 tons per day. Q3 up to 685. We're targeting 600 to 700 tons per day through the balance of this year, and ultimately looking at 1,000 tons per day from mid-2022 onward. We have seen a steady improvement in mill head grades quarter over quarter. with a target range of about 5.5 to 6.5 grams through the Q4 period of this year, and ultimately, again, looking at 7+ grams per ton from 2022 onward. And I'm going to dig into this a little bit more to show you what we've seen from the mining activities conducted over the first 10 months of this year, and really highlight that the mill head grades that we've been seeing is a combination of higher grade stope feed from underground, both reserve tons and discoveries or stopes that I would call outside the reserve. These are things that didn't form part of our reserve that have gone through the mill, and supplemented really by low grade development feed to really bring the mill up to a steady state operation. Moving forward, as we continue to develop, we see the reliance on low grade stockpiles is reducing, and that's how we see our growth profile growing to come in line with our overall head grade as anticipated from the mineral reserves that we have on hand. So I will talk about some of the challenges and our solutions that we've seen and developed over the course of this year thus far. Early on, we were constrained by a single ramp as the east ramp was being collared and driven down to access the ore body. There was a bit of, I would say, congestion in that main ramp, and access to enough stopes to dry feed was a challenge early on. That's been addressed now with the second ramp stoping commenced from July onwards. As I said, the first two stopes that have come out of there have averaged 9 grams per ton, and we see the feed from that east ramp is growing month over month as we move forward. Limited stope access, I talked about that. That is both addressed by the addition of the east ramp targeting or mining in stopes from that area, but also by the continued development of our main ramp, which today is driving down deeper on a day-by-day basis. Some of the early parts of the mine, we had limited drilling, and that really was an access scenario where we had a single ramp that was fairly shallow and didn't give us the proper access for targeting some of our mining stopes. Obviously, as we've grown those ramps, we've grown the access for drilling, and we've gone from 1 drill rig at the beginning of the year to 4 today, and we're seeing the benefit of that today with with additional discoveries in close proximity to our development, and ultimately we see that as reducing development costs and improving the grade of the mining stopes that we take from the underground. Finally, we are looking at restructuring our maintenance, establishing in-house capabilities, and all this is going to drive higher equipment availabilities, which will drive lower cost structure as well as improving production from underground. I talked about the main ramp. You can see where we were at the end of Q3 at a depth of 419 meters. We do anticipate being about close to 500 meters below surface by the end of this year. It has been a focus. We've been putting real investment into that ramp with a dedicated crew on the ramp face. We are achieving better than 5 meter advance rate per day today, and really the driver for that is to open up the mine and ultimately get us to the full profile of the deposit and access to the 8 zone. Again, as we've talked about, the 8 zone is pretty exciting part of our mine plan, and being ahead of schedule on that main ramp means that we'll be targeting earlier from drilling and ultimately bringing it into the mine plan ahead of the feasibility schedule. We talked about drilling. You can see the impact of having the additional rigs on site with Q1 showing an average of showing 3,445 meters and targeting a forecast of about 25,000 to 35,000 meters in Q4. That is a significant ramp up of drilling underground, and we do see that coming off a little bit as we move into steady state production from about July of next year onward. So just to touch on grade, this is an important graphic here, and what it shows is the combination of high grade tons to the mill in the red bars, supplemented by low grade development feed, which are shown in gray. And so when you think about this, if you look at Q1, for instance, about 52% of material is what we'd call high grade stopes from underground, 48% was low grade development feed. So this is material that sits in the range of 2 grams per ton and really was used to supplement the feed from underground, the high grade feed from underground, to optimize the mill and bring it up to steady state production. We have been seeing that as we grow access through the east ramp, main ramp, declining quarter over quarter. That translates directly into an improvement in head grade. And you can see in Q4, we're targeting about 85 to 100% to come from high grade development feed and stopes. So to look at reconciliation to date, that is shown in the graphic here. There's 2 things that we're showing. The first couple of lines there are titled short-term grade control to actuals. So this is looking at all the chip data that we have from underground, the short-range drilling, the things that we use to define the stope, and then comparing it to our actual mining. And what you can see there is a pretty darn good reconciliation with all that data showing an average grade of about 5.7 grams per ton. We're plus 6% on tons. So overall mining dilution appears to be quite low given that change in tons, and the grade is spot on to our expectations. If we kind of strip that out, what you'll find is that about half of the tons we've mined from stopes has been from areas outside of our reserves. So these were taken because they were close to development or for sequencing reasons. But if we just strip out and look at a stope-by-stope basis to what's in our reserve model versus to what we actually mined, you can see below that we've achieved in mining in those reserve stopes grade of 7.8 grams per ton. We're within 2% of where we expected to be from our reserve model. And at the end of the day, this is what gives me a lot of confidence in the operation. We're looking at reconciliation here that's quite strong from a mineral reserve perspective. We're making new discoveries outside the footprint of those reserves. And as we open up the mine, as we've been opening up the mine, and we'll continue to do so through the balance this year and the first half of next year, we're going to see our grade of the overall mine come back towards where we expect it to be from our reserves, as we see on this slide here. When we touch on the profile of the deposit, what we're looking at here is a quarter over quarter from the feasibility study. So bear in mind, this is at 800 tons per day. At 1,000 tons per day, we would expect to see this compressed towards the left-hand side. You can see the first part of the mine was expected to be lower grade. It is a grade profile that we did see in the deposit, and quarter over quarter, we look to see improvement in grade as we move forward deeper into the mine itself. You do see the impact of the 8 zone here in the tail end of the mine. It is a real driver of grade. It translates into higher production and much lower unit costs, and really is a strong period from an economic perspective in the mine operation. We are looking at some cost optimizations. Again, things that we've learned over this year. We've got a new crushing and hauling contract that will show us about a 40% reduction in costs that came into place very recently. We talked about mine maintenance initiatives. We are optimizing our operation on the ground, and some of you may know Maurice Boulanger. He's one of our directors. She has stepped in as mine general manager, and really happy to have her experience on site, and she's driving a lot of these initiatives with a laser focus, if you will. Some of the other things that we look towards for next year: camp installation to reduce overhead on travel and accommodations, and really drive recruitment as well. And we talked about the gravity circuit and some of the other initiatives. So what can we expect over the next 12 to 18 months? Well, we are going to see our throughput continue to climb up towards 1,000 tons per day, where we expect to be steady state from mid next year onwards. Grades will increase with depth, and we expect the grade will also increase as we open up the mine and focus on the mineral reserves themselves and achieve that reserve grade. While our operating cost initiatives should drive costs down with the improved throughput on a unit cost basis, we do see a real significant step change in costs as we moved into 2022. And ultimately, our sustaining capital next year will be lighter as well, as many of the build, if you will, is complete now. And we'll see those overall sustaining costs decline on a month-over-month basis. So I'm going to sort of finish off this presentation talking about the growth aspects. It is such an important part of our story. This graphic is really a fantastic graphic to show some of what I've been talking about from an expansion and growth perspective. What we're showing here is we call it a long section. It's a slice through the earth. On the right-hand side, it's the Red Lake Mine, which, as I talked about earlier, has been in operation from 1945 onward. It shows all the mining that's conducted over the last 7 decades, and you can see how it's grown from surface all the way down to a depth of about 2,500 meters. On the left-hand side, same thing, but our PureGold mine, mineral resources and reserves defined from surface down to 1,200 meters. But again, what we see over time is our resource continuing to grow to reach similar depth to the Red Lake Mine. And why do I feel so convinced? Well, typically these types of deposits have very deep roots. But when you look at our own resource defining that first 1,200 meters, we have very little drilling below that to show the deposit itself. So this is a bit of a cartoon, but you can see one hole I've highlighted there, AD 1101, return half ounce over 2 meters. And geologically, when I have a look at it and I compare it to what we're mining today in the ramp system, it's the same. It's part of the deposit. And so our view here is that as we get deeper in the mine, we set up an exploration drift and we start drilling the potential for both the 8th zone as well as the main part of the deposit to grow. And this is truly an important part of the growth story. You know, you look at that top 1,200 meters, and with our 2.1 million ounces of measured and indicated resource, 2.5 million ounces of historic production in that same footprint, you can see the endowment there that points to the next the next few million ounces of potential that lies below us that requires drilling, but is substantiated by some initial drilling in the area. You can see where the high-grade zone on the Red Lake mine is located. Ultimately, it drives that thin wedge down towards the bottom of the deposit. Our 8th zone sits in a similar depth, and it really is our high-grade zone. So just to touch on some of the similarities, it's a similar geologic setting. You can see some of the key drill hole intercepts from the high-grade zone discovery as well as our own 8th zone. Very comparable. Comparable strike length, comparable depth. Our 8th zone itself today hosts 301,000 ounces of indicated resource at 20.5 grams per ton. But importantly, it is completely open for expansion. And that's why I'm so excited about not just getting down there and mining it, but where we sit today with the first phase of drilling planned out and ready to go, where we'll start targeting the upper part of the 8th zone and opportunities for growth. Stepping outside to the footprint, you can see here a general arrangement of the site with all those arrows pointing to the mill itself. There are some boxes in red there that I'll call out, Russet, Fork, and Wedge. These are discoveries that we've made over the last 5 years on the PureGold mine property. They today host mineral resources. They're at surface. They've been variably defined from surface down to about 500 meter depth. We've continued to drill in those areas. We are currently updating mineral resources, and part of that will be an update of those satellite deposits, if you will. Ultimately, we've done some high-level engineering work where we look at setting those up as their own mining centers, drawing material from Russet, from Fork, from Wedge, and bringing it back to a centralized milling facility. And so a combination of expansion of the 8th zone at depth, expansion of the main mine deposit at depth, and incorporation of these satellite deposits. This is why we see such a strong path to phase 3 of our growth plan and expanding the mill again and driving towards a future producer in that 200,000 ounce per year range. So I've run through this fairly quickly. Hopefully for those of you, again, who are new to the story, it gives you a sense of who we are, what the opportunity is today. We are Canada's newest gold mine. We're ramping up to full production, which we anticipate reaching in 2022. But importantly, such a strong path forward from a growth perspective, both through expansion of the main deposit as well as incorporation of our satellite deposits, not to mention the overall exploration potential of the 47 square kilometers that we hold in the Red Lake area. I truly believe that we're just getting started here, and really excited about the balance this year, 2022, and our growth trajectory from there on. So that is the conclusion here, and with that, we can open it up for any Q&A.
Terrific, Darin. Thank you very much for a very thorough tour and a look ahead at the company's trajectory. Appreciate that very much from your perspective. And it's been quite busy in the Q&A section, so we're going to jump right to it. Thank you for that. One question comes in here. What have we done in the past few months, Darin, to try and reduce the amount of waste rock being mined, which has in turn significantly increased the AISC?
Yeah, that's a great question, and it really highlights it's highlighted in one of the slides that I presented there, where you see that proportion of low grade and high grade material that's been fed quarter over quarter through the mill. And really that comes back to having access to enough development headings and having access to enough stopes. That has grown considerably month over month, over the course of the last month, we've mined from 5 different long hole stopes. We've got, a dozen or more headings that are active today. Having the east ramp now actively both developing on high grade ore as well as stoping ore from long hole stopes really allows us to reduce that reliance on low grade material and improve the availability of high grade broken inventory to feed through the mill. It's driven improvement quarter over quarter. We're not where we want to be, but where I feel really good is when I look at that reconciliation on a reserves basis, and I see that we've mined 7.8 grams per ton out of those reserve stopes, and it compares within 5% of what we expected from those stopes. That gives me a lot of confidence in the underlying geology and the reserves itself, and really points to the operational issues of opening up the mine. We're getting really close, and I'm really excited about again 2022.
Okay, Darin, thank you for that. We have a handful of questions that dabble in the financing area, so I'm just going to try and cultivate a few that are overlapping here. One question from Jawad is, will the company have enough money to drill the 8 zone without raising additional cash?
Yeah, our idea here has been to drill the 8 zone from cash flow from the mining operation. Obviously, we're still ramping up. We're targeting, for the balance of this year, 600 to 700 tons per day at that 5.5 to 6.5 gram range. So not quite where we want to be. We see month over month improvements as we move through 2022 and beyond. And with steady state 1,000 ton per day production at expected grades mid next year, I think we'll be in a position to drill the 8 zone fairly early in 2022 and do so from cash generating from the operation.
Okay, thank you for that, Darin. Question comes in also, any potential changes to the reserve model based on the 2021 mining?
Yeah, not at this time. And again, I say that because we're looking at you look at the reconciliation that I talked about in this presentation. And when we look at those stopes that are mined from the reserves and compare them to what we've mined, the actuals for mining underground, we are seeing good reconciliation there. Really, it comes down to, again, having enough headings and enough high grade stope material to feed the mill. So as we grow out, we expect to see that grade come closer to the overall grade that we saw in the feasibility study and the underlying resource and reserve model. Mm-hmm. Globally, I think we've got a really good, accurate depiction. I will remind listeners that across the 1,200 or the million ounce reserves, we've got 1.2 million meters of drilling. Some of the areas that we've been mining in the early part of the mine have wider spacing, but ultimately over the life of mine, we're looking at about 6.5 meter spacing. So there'll be minor tweaks locally for a short-term mining perspective, but overall, I think the global resources and reserves are behaving quite well.
Okay, Darin, thank you for that. We do have a few questions that cross over here, specifically around the low share price. So I'm going to choose this one that offers this question. The share price has been somewhat low. Does the board plan to participate in any share purchase or buy-ins?
Yeah, obviously we're not happy about the share price performance this year. I myself own 1.9 million shares, so I am very much aligned with shareholders and looking to drive value moving forward, improvement in share price. Really, what we're looking at right now is a real focus on the day-to-day. People have been watching us ramp up and looking for the ramp up to reach full production. We've learned a lot over this year. We're in really solid shape from that understanding and from what the underlying data is telling us. And I see this as a real opportunity moving forward with value creation, focusing on a full-scale, 100% productive mine with those growth opportunities, which remain very much intact. I think that 2022 is going to be a very good year for PureGold.
Okay, good to know that going in. Thank you very much for that. Question here, any comments, Darin, about the new mine management and what the top priorities are now in post?
Yeah, so driving the operational improvements from a mining perspective, I've talked about, growing the number of headings and stopes from underground. Really excited about having Reese on the ground. As I said, she's got tremendous operational experience. She's got experience in the Red Lake area, working with Goldcorp as VP Technical Services, responsible for the Red Lake mine. So she builds on that experience, and she's a roll up the sleeves and get it done person. She's hit the ground running, and we're absolutely thrilled to have her on the ground. And I'm seeing real change at the operation, and that's going to drive the improvements that we need to see.
Okay, Darin, thank you for that. Good to hear your confidence there. A few questions that really touch on the same specific question, very clearly saying, is there a chance of another financing coming in Q1 2022?
Yeah, so I mean, I can't say yes or no, but there's always a risk. But having said that, we're looking at our 2022 mine plan and budget right now. We do see ourselves as being, cash flow positive in 2022, and ultimately that mine plan and the underlying budget will drive our requirements moving forward.
Okay. I know at one point in your presentation, you did have a bit of a look ahead for the next 12 months, but let's circle back and I always like to offer that opportunity to re-underline key turning points in the next 12 months or so that investors can watch for. Obviously, there's some very curious questions here about financing, where the company stands at this point. We understand the new mine management that you've offered as well, but what should we watch for from the outside as investors over the next 12 months?
Yeah, so we've touched on a number of those catalysts, if you will, that we should see over the next 12 months. Really, when you look at the target range right now, 600 to 700 tons per day at 5.5 to 6.5, it's about backing off the mine to focus on delivering the stopes from underground as well as high grade development feed. We're not feeding the low grade stockpiles. We're not going to fill the mill with low grade. It's really about backing off, building that broken up inventory underground, optimizing the mining operation to grow month over month through 2022 to steady state 1,000 tons per day at expected reserve grades. And I can tell you that's going to obviously drive a very significant step change in all-in sustaining costs, both from a throughput perspective, but also a grade perspective. But we're not stopping there either. We're looking at every opportunity at the mine to streamline the operation. You can see some of the cost initiatives that we've seen there, and those are having real-time improvements and impacts on the mining operation.
Okay, excellent. Good to know that. Just in terms of the forecast in the new year, nobody has a crystal ball, I guess, but clearly management is a key part of this. We've talked about your new mine management, but any other comments on the team that's working with you, Darin, that's really lifting the vision? We've come through some challenges and facing some opportunities moving in the new year as a company. But who would you say you'd like to highlight aside from new mine management within the company itself?
Yeah, look, we've got a very strong and very committed board. I think it starts there. We're 100% aligned and confident in the mining operation. Maurice has been fantastic stepping in as mine general manager. There's a group of highly skilled individuals that we have at site, and it's really about giving them the right tools and empowering them to make the right decisions to drive value for moving forward. So, again, with the board and the management team that we have in place, I'm full of confidence in terms of what the next year looks like and the improvement that we'll see there.
Okay, terrific. I know you had a very fleshed out and well thought out presentation, Darin. So as we mark towards our break time here, because we will be approaching the top of the hour, I just want to open the floor to you one last time for anything else that you'd like to share with our investors.
Great. Well, thanks, Mark. It's been a real pleasure today. Again, I'm excited about where we sit today. From a operational perspective, we've had some challenges. We understand those challenges. We've put solutions in place. We've got the right people in place. I do anticipate seeing month over month improvement, and by Q2 of next year, we're going to be driving 1,000 tons per day at expected grade through the mill, generating strong positive cash flow. And that positive cash flow is going to allow us to now look at to growing the operation much like I laid out in the phased approach. So stay tuned. I think it's an exciting time. It's from a share price perspective, there's a real opportunity now today when you look at where I see us going in 2022. So thanks again.
Terrific, Darin. A good note to finish off on. I appreciate the presentation and your wisdom. All the best for the holiday season. And as always, our investors will be watching the company very closely. So all the best to you and yours for the holidays. Thanks for being with us today.
Cheers. Thanks, Mark.
Absolute pleasure. Folks, once again, a reminder that as we close this webinar, you'll be directed to a survey. We welcome your feedback. And then as we get close to the top of the hour, we welcome our next guest. We have PureGold Corporation joining us for the next hour. So lots of opportunity to ask more questions of our next guest as well. So for now, I'll say thank you very much for joining us as we end this webinar. Keep an eye out for the survey, and we'll see you at the top of the hour.